It just didn't happen. 40 years ago, the Financial Management Research Centre at the University of New England pioneered the development of business management strategies for accountants. Prior to then, accountants were primarily involved in audits, insolvency work, and the preparation of income tax returns. Obviously, for businesses, this included financial accounts, which were then reflected within the income tax return. But there was very little management work done by the accounting firms unless they were also auditors. The Financial Management Research Centre was an important decision that the Senate of the New England University made, probably about 42 years ago. And the brief to FMRC, which they then very forcibly conveyed to accountants, was, apart from tax work, let's try and help our clients more with their businesses. At the same time, there was some interesting developments in technology. A few years earlier, Wang computers had been introduced to the Australian market, and they became the market leader, especially for small and medium-sized accounting firms that embrace this concept of using computers to produce financial accounts and some of the tax return work. There were a lot of developments to come, but at that time, we thought it was great, this technology that we then had to use. And the software was pioneered by David Hartley, whose business was called Hartley Computer Systems and traded as HAPAS. And that might bring back some memories for some of you. Solution 6 and later on Xero also followed, together with MYOB, in this development of software for accountants. But primarily, the software that has been developed was centered on taxation. I believe there's a lot more services that accountants can offer to your SME clients beyond taxation. And in fact, I really believe, and I know from marketplace reactions, that SME clients need additional assistance. The taxation return doesn't really help them run their business, does it? You need to look at the trends. This was a comment by Andrew Geddes, who was one of the joint founders of FMRC 40 years ago, and later on became a well-known accounting industry mentor and consultant. And for 10 years was the chair of Green Cross Limited, a veterinary surgery business that Andrew originally advised 35 years ago, who became a top 200 ASX company. Andrew Geddes has had the opportunity to view the Australian accounting profession from a number of different angles. And his comment in a recent podcast that I recorded with him was, look at the trends, understand what is happening. There's some real changes occurring. The Australian Taxation Office is driving through digitisation, robotics, and artificial intelligence. The ATO has made it very clear that the demand for some of the basic compliance work is going to reduce. And this comment was delivered by the Tax Commissioner himself, Mr. George. Andrew's comments were some SMEs are engaging accountants and bookkeepers to produce more business-related data that they can use to help them run their businesses. Metrics where they can analyse key performance indicator movements from one period to another, whether it's daily, weekly, monthly, where they can compare. Because when you do that, you will quickly observe an anomaly. Something's changed. It needs to be investigated. Whether it's positive or negative, you need to look at it. Other SMEs want more business data, but they think their accountants are too busy. And unfortunately, I think as a profession, we're probably given that indication to the marketplace. You need to somehow get the message across to your clients. But whilst you've got some work to do, you're always interested in what their requirements are, how you can help them to run better businesses. Don't push them away. Some American firms have created new strategies to offer virtual chief financial officer services to SME clients. This trend in America has been pioneered by Summit CPA, who were looking for what other work they could do because they could see that the changes in the software relating to lodgement of tax returns in America was reducing the amount of time that accountants had to spend on the tax return preparation. Summit CPA wanted to retain their team of accountants and went and had a discussion with some of their clients as to what else can we do for you. And do you know what? According to the Summit CPA principal, Adam Hale, they were welcome with questions from their clients along these lines. Yes, we want you to do more for us. Why is it taking you so long to ask? Why has it taken you so long to ask? Because the SMEs knew that they needed some assistance. You asked your clients in Australia or New Zealand what their requirements are. And there's another very important trend, because every accounting principal that I talk to raises very quickly in the conversation the difficulties of finding team members or retaining team members. Well, I can assure you the work that we're going to discuss today, these new trends that Andrew Geddes was referring to, will definitely supply your firm with interesting and challenging work that you can keep all of your team motivated and enthusiastic to be undertaking this work. I don't think firms that are really committed to this concept will have problems with talent, attraction, and retention. So what is all this telling us? I think an annual set of accounts and a tax return prepared 3 to 9 months after the end of the financial year, if the client's lucky in some cases, because I hear there's still returns being prepared for 2022 fiscal year. But another way of expressing this is 15 to 21 months after the start of the financial year. That's when the client gets their annual accounts. It's not good enough to help them manage their business. They need more regular information. And it's just not the profit and loss account that they need. They need business metrics. They need key performance indicators. They need budgets where they can compare what their actual performance is back against. I think you need virtual chief financial officer services to assist clients to survive, especially in 2023. The media is starting to have more and more stories about how difficult it is. So let's look at you being able to scale up your services. ESS BIZTOOLS has been producing material for Australian and New Zealand accountants for 25 years, and we have continued to evolve, just like the accounting profession is evolving. That's what it's done over the last 40 years in particular. And we are changing our product packages at present to make an entry package available for bookkeeping firms to use and to introduce this whole concept of the virtual chief financial officer service. But it all starts with understanding what your clients' needs are. Now, clients don't really know what accountants can supply them. For years, we have just produced tax returns. And there's a lot of SMEs believe that's all accountants can do. part of the education process, I believe, is you sit down and have a conversation, a quality time conversation with your clients, one-on-one, 1, maybe 2 hours, over a cup of coffee or tea or a glass of wine, if that's your choice. And try to get the client to tell you what's worrying them. What gets them out of bed at 3 a.m. worrying about their business? Is it a succession issue? Is it a financial issue? Is it they don't think the business is performing enough? Is some other issue causing them concern? And within our product packages, we have a document called the SME needs analysis. Actually, it comes in 3 different formats that you can choose which one you want to use. But it'll give you some questions and some points that you can make with the client, and just keep on raising them, trying to find out really what are the issues, and then prepare a proposal back to your client as to how you can assist them to overcome these concerns that they have. So scaling up services is the model that suggests to your clients, this is a system we could introduce for you, which will give you real-time information. And the first component of this is the virtual chief financial officer system. Now, the first thing that we all need to realize when you start with a new client is you need to get an understanding of how their business operates. 1 inch wide and 1 mile deep is the terminology that Adam Hale from Summit CPA in the USA refers to this due diligence process. Now, for most of you, this will be attempting to obtain additional information about your client than what you already know, because some of the systems and processes that go on in your client's business, you probably have not come across in preparing annual accounts and an income tax return. You might not have visited the client's premises. I think it's very important if you can, if you're going to be the virtual chief financial officer. So you need to go through the due diligence review, understand every aspect of the business, how it operates, what the internal control processes are, what are the risks, and have they developed contingency plans for those risks. A business plan is the key document. And I think we should be saying as accountants to every one of our SMEs, you need an annual business plan prepared. Or it might be an annual one and you're going to update it maybe for the next 2 years and then redo the business planning process again. The real benefit is that you will be assembling the client's leadership team for 2 or 3 days over a couple of week period to go through every component of their business, to get their input, because at the end of the day, it is not your business plan, it is the client's. You're the scribe. You're there to write down and interpret and to use your knowledge as an accountant as to how that document is put together. Because it is the leadership team which has to implement the business plan. And we need to be continually aware of it. And the business plan is the all-important document that everything else should flow from. And the most important document to flow from the business plan is the predictive accounting reports. These are the financial interpretation of the business budgets for each operating entity. Please don't put it all together in one P&L or one budget. If they've got 10 different operations in their business, break them down into 10 separate budgets and also 10 profit and loss accounts each month. We'll talk about that a little later. And you need to identify the key drivers. The key drivers are the supporting information, debtors, creditors, payroll, research and development activities, capital expenditure, and other items that give more information, because key performance indicators can be calculated. Debtors days outstanding, creditors days outstanding, days of sales expressed in the inventory, and so on. The cash flow forecast. Now, the cash flow forecast is going to have input from the budgets, from the key drivers, and it's going to be showing your clients whether there's some trouble ahead in funding of the business, so that they're pre-warned of the issues which might be caused through the conditions prevailing in 2023. The higher interest rates, supply difficulties that businesses are having. I went out to the business that's been servicing my motor cars for many years the other day, and I saw 25 cars in their car park. And I said to the mechanic that I was dealing with, are these the staffs? I didn't think they had that many staff. Or are these current jobs you're working on? He said, well, they're jobs we're working on, but we're waiting for parts. And all these cars parked very closely together because they were storing them, waiting for the parts to turn up. I think that's affecting thousands of businesses around Australia. So what sort of cash flow implications is that giving? So your clients are going to run into a situation where they need some more funding. Should they be thinking about trying to borrow the money or raising some capital? And the projected balance sheet. I think the balance sheet is a great document, because you can do these forecasts for 3-5 years into the future, and then sit down and have a slideshow with your client and saying, based on us doing these things, this is what the end result's going to be. And the end result might well be that we can sit down then and value the company. And we might have been using an after-tax multiplier of, say, 3.5 or 4 at this stage, but because you've put in this new intellectual property you've developed, and you've got a board of advice that you're going to have operating by then, and you're also going to have an audit conducted because your ultimate aim is to become a far bigger company, we think you might be able to have the multiplier at 5.5 or 6, and the value of the business will now be this. It gives the full picture to your client. And this is exciting accounting work when you go through that process with your client. Now, there's specific customization that can be included into the virtual Chief Financial Officer services. Virtually every accountancy firm in Australia has got tradies as clients. Mechanics, I just talked about, but carpenters, plumbers, tilers. I think that benchmarking.com's got about 120 different categories of tradies on their reports. How do they set their charge out rates? We've developed a separate package as part of the budgeting process, so that you can sit down with your clients and assist them to set charge out rates which are going to return them the profitability they want. And a very similar document is for professional service firms. For retailers and wholesalers, it's a different issue, because they're buying a range of stock, and stock items all vary. Some are fantastic selling products, and they can get a high markup and a high volume of sales. Others, they are cash cows. They sell a lot of it, but they don't get much markup. Others are problem wise. They're last year's fashions that no one wants red this year. Everyone's going to wear yellow from ladies' fashions. And then you've got the real dogs, the ones that no one owns up to why they bought them, or they turned up again on a computer reorder program because someone forgot to change and stop the official reorder. And we've got manufacturing businesses charge out rates, which are very similar to tradies, just that we've put in a few more documents to help you advise a tradie on having an appropriate system. So that's something you could do. I think it's important that there's a monthly rolling forecast, and in the software product which we use, Plan Guru, we not only have the budget and the cash flow forecast, but we're then able to get a rolling forecast, which enables changes being made month after month to be reflected, but you still have the credibility of the original forecast you can compare back to. There might be some significant changes. Key drivers, I've referred to those already, so you've worked through those. And the key drivers there are looking at some of these items that you can compare to each month. Now, this is giving your client real data back, the same as what happens in larger corporations. I know, I was the Chief Financial Officer and Company Secretary of a listed public company. We operated in 3 of the eastern states, and we were in the meat industry. So we were running various types of businesses, large meat works, retail butcher shops, delicatessens, cold rooms, stores, and we were getting information like this every month, and we were getting more information, which I'll refer to in a moment. So some of the other things you might be able to look at as part of the key driver analysis is also capital expenditure. What's the process? How much money's been provided, so people can see what projects have been included in the capital expenditure, research and development, individual projects, and a monthly analysis of the cash flow to see how the forecasts are showing as compared to the actual bank position. Does something need to be done to shore up the financing? So is additional funding required? What might you look at when you're talking to your clients? You can say, well, we can get some loan funds. Now, these days, most of our clients can probably borrow up to $150,000 without security. But if they want to go any higher, I'm sure they're going to need security. Because the client wants you to do the loan application. Is there a possibility of getting a government grant? There's a lot of government grants around Australia and offered by the state, territory and federal governments. They need to think about some equity raising. And these days, there are 3 great opportunities for private companies to raise capital. Crowdsource funding equity raising. A company with a turnover under $25 million can raise up to $5 million in a 12-month period. Section 708 has been in the Corporations Act for nearly as long as, a bit longer actually, than what FMRC's anniversary was. So over 40 years ago, that legislation was introduced, and it enables a private company to raise $2 million in a 12-month period from a maximum of 20 investors. But there's no advertising or promotion allowed. It's basically amongst family members and mates and people who know the business. But it's a great first start when people are looking to raise some money. And we've also got early stage innovation company, which was a great initiative of the previous government to encourage investors to look favourably at companies that had introduced or produced new technologies. Because the government introduced a carrot for the investors. They invest in a company that qualifies as an ESSIC, the early stage innovation company. The investor receives 20% of their investment as a tax payment offset. There's a maximum amount for a sophisticated investor of $200,000 and for a retail investor, $10,000 off their tax bill. The monthly business review meeting is vital, I think. Now, this is for the leadership team, but if you're playing the CFO role, it's the partner or senior manager in the firm responsible for a particular client, I would see you claiming the ownership of this meeting, in effect, that you will facilitate it, the agenda, the reports, the minutes of the meeting, the action plan. And then there's an advisory board that I think you should be encouraging your client to form. 2 or 3 people, including your accounting firm representative, to review all aspects of the business. Why? Because running a company is a lonely affair, and there's a lot of companies out there, thousands of them, that have only got one director. It's not feasible in lots of cases to have other people on the board of directors, but a board of advice is becoming a very popular concept in Australia to get some real business input into what's going on in the business. So as part of that, you prepare the monthly financial report, the submission to the monthly meeting, and then participate as a member. But the other big concept that I want to talk to you about is the 52-week business enhancement system. And it starts with the bookkeeping. The first task I think you should be looking is what's going on in the client's office. Is the bookkeeping system fit for purpose? Is it giving the information that's required? What daily information does the operator of this business want or need? Most businesses, it's going to be daily sales, number of customers, average sale made that day. How does that compare to yesterday and last week, or the norm? And any other information the business owner or CEO says that they require on a daily basis. Your role would be to make sure this system is established and the information is supplied to the CEO or owner each day. Weekly performance report, KPIs and metrics, and a weekly profitability report. This is standard practice for larger corporations. I mentioned before, I was involved in a meat company. We knew every week what the financial performance had been for each of our operations, and we had over 300 of them around Australia, including 4 major meatworks and then retail shops selling meat, delicatessens. Larger businesses do it. I've done some work for some of the IGA stores. They're doing it. Coles and Woolworths, I've talked to their managers, they do it. I played golf last Sunday with a guy who was area manager for a hotel chain, a major hotel chain, and he had responsibility for 8 hotels. I asked him what he got. He said, I get daily information from the 8 of them. I know all the KPIs. And at the end of the week, we get a weekly report with the profitability report for that hotel. Now, in the company that I was with, we aim to be 98% accurate in those weekly performance reports. And virtually every month, we achieve that. Compare this with your client. It's running a hotel on their own, or a butcher shop on their own, or a corner store. What information are they getting daily and weekly that helps them run their business? Because they are competing with the bigger businesses that are competing against them. And then at the end of the month, I think there should be a full financial report, a P&L for each individual operation. And as I said earlier, if there are 10 individual operations, we should have 10 profit and loss accounts. Only one balance sheet, but 10 individual financial reports, so that these could be compared back against the budgets that were prepared as part of the predictive accounting process. So we have the comparison to budget, the actuals versus budget, and the monthly analysis will include the business health check metrics, where we've analysed number of customers, number of customers that entered the centre where the business is created or operating, and what was the percentage of the people went into the centre that actually came to the store. Now, on their own, those figures don't mean much. But if you've had the records week after week after week, and you know that your client is achieving 4% of the throughput into the total complex, and suddenly it jumps to 9%, a manager should be saying, what caused that? What did we do right that day? Now, it might have been that there was a great promotion done next door, and you got some flow-on effect. It might have been because your client did some special promotion. The key thing is that that information needs to be promptly displayed so the client can analyse it, and they work out what caused it or find out. But they need to know. The reverse is also very important, of course. If they're running on getting 4% and it drops to 1%, what caused that to happen? Periodic work assignments. I think business valuations are very important. I mentioned that earlier, that it's part of the predictive accounting process in the projected balance sheet. If you're projecting 1, 2, 3, 5 years forward, and the client is planning to do various high-level work, which might be in a research and development project. It might be furthering registration of patents, intellectual property development. The company may have appointed a board of directors or a high-powered board of advice, and there's been various other things, perhaps started to have an audit done, which would encourage you as the valuer to say to the client, I think I can now increase the multiplier when we're determining the multiplication of the after-tax profit to determine the value of the business. It just gives the client some warm feeling that all the work is worthwhile. Because if a company is showing outstanding financial performance and outstanding administration, it does enhance its value. How do we improve the business valuation? I've just talked about that. The risk analysis, development of strategies to reduce risk. In ESS BIZTOOLS, we've got a very long list of potential risks with comments about them and suggestions as to how you might be able to assist your client. And a lot of this comes back to being available to help in the mentoring of the senior leadership team. I found over the years that some of these people, whilst they're great mechanics or great foremen, don't understand corporate governance concepts, don't understand how to read financial data and the business metrics or key performance indicators. They need to be shown so that they understand, so that they can get the value out of it. Some people like the concept of an annual strategic planning meeting. I know some of our accounting firm subscribers are conducting annual strategic planning meetings for themselves and also for their clients. Basically, what it's like is trying to show your client what everything will look like in 3 to 5 years' time. This could be a 2-day event. Most of the people that I know do it, go remote somewhere. They go out of the office, they get away from the business, they get away from those telephones, and they sit down and really evaluate what's going to happen. It could be part of the business planning process, but it's really to develop an annual strategic plan. It's best done in March, April, so that you're setting the scene for the new financial year to start from July 1. And what it's doing is encouraging the leadership team to identify future projects and expectations. And one of the key concepts that come out of it is this identification of we must achieve things every quarter. So what's the first quarter? What are we going to do? And what are the pattern of meetings? 5-minute leadership team meeting every day. Phone in if you're away from the office. What time? 7:30 a.m., 8 a.m., 9 a.m. And then what other meetings are taking place? Not only for the leadership team, but through the entire business. And what are the functional responsibilities? And have they been reviewed? Do people understand what their responsibilities are? Some periodic work assignments that you might be able to attend. That ESS BIZTOOLS has got full details of how you might go about producing this work for your clients. Research and development. This is a huge area for SMEs. There was a report released by Oz Industry last year, which indicated that the total expenditure by companies with turnovers under $20 million, that's the only initial turnover limit that the research and development legislation has, so 0 to 20 million turnover, the expenditure on research and development activities was expected to be about $5.4 billion. Because the report from Oz Industry was to alert Treasury as to what the research and development rebate claim would be. That's calculated at 43% of that $5.8 billion. A lot of money. Yet I continually run into accountants who tell me they don't know anything about research and development. Well, there's a lot of people out there doing it, and a lot of them would be SMEs. They're not all at the top level of that 20 million turnover cutoff. In fact, people within Oz Industry will tell you the significant percentage is in smaller businesses, under $1 million turnover. Where are those people? Are they your clients? I hope you're looking after them. The documentation of the project, the recording of the experimental projects, the costing of the work, and the completion of the annual declaration to be lodged with Oz Industries is all part of the research and development process. And then completion of the specific information, which you have to include in the company's income tax return. There's special boxes there you've got to tick. I don't do tax anymore, and that's probably obvious from how I answered that, but it's there, and I'm sure you know where it is. The Export Market Development Grant. Now, it's had some changes over the last couple of years, but it applies to any type of business, not just a company. So company, trust, partnership, sole trader can all apply for the Export Market Development Grant, and they could access up to $770,000 over a 5-year period to help them defray some of the expenses in promoting Australian exports. The turnover limit is $20 million. Used to be 50 million, but it's now only 20 million. So some of the other periodic work assignments, which we've got full product packages within ESS BIZTOOLS, cover things like buying a business, selling a business, the debtors management review, the debtors systems manual. One of my pet hates is going into a business and asking the person responsible for debtors to show me the system, and I get a vague look, or to show me what did you get given about the debtors system. They'll produce a bit of a stick on the side of their computer, and it says send the statements out on the 5th day of the month or something like that. Nothing else. So we've produced a complete system which you can go through, you can edit for your clients. The person who's responsible for it has got some idea of what all this is about, because there's a lot of different questions going on, isn't there? What's the debtors days outstanding? Should we be registering this client on the Personal Property Securities Register? We've explained a little bit about what that is. So the poor person, I call them the poor person because I don't think they get enough training, has some idea what it's all about. Succession planning, huge issue for businesses, and survival in difficult times. I originally wrote that package 10 years ago for a problem in Western Australia. But over the years, I've realised somewhere in Australia, virtually every year, there's survival issues caused through drought, floods, cyclones, and other issues. So it's a product that you might like to look at with your clients. So I think the CFO role for SMEs is the new standard. That's how you should be describing yourself to your clients. 40 years ago, the University of New England, I think, made a courageous decision. They formed Financial Management Research Centre. But the world has moved on. Businesses need accountants to supply more timely information now than what they did previously. And to be honest, not many of us really implemented that original vision from FMRC 40 years ago. But clients now do need accountants to supply this information. And we're primarily referring here to the SME market. The big end of town gets looked after quite well in all this because they employ full-time people, and then they've got auditors and other advisors from the big accounting firms, the big 4 and the top 100 firms, helping them. But there's a lot of SMEs also need that assistance. We look forward to being able to assist you, if you wish, to supply your firm with suitable resources to enable you to deliver the type of services that I have summarised today. Your firm will win. You will have happy, successful clients, and they all need some assistance this year. Your talent attraction and retention statistics will improve because you will be offering interesting and challenging work, I can assure you. We're making a contribution to help you get started on this journey. We've got special discounted packages. You can pay as little as $149 per month for a starter package, up to $578 per month for our financial forecasting package. Now that special has been extended to run until next Wednesday, the 18th of October. I hope you're able to avail yourself of this special offer by clicking onto our website, let's go back to that, www.essbiztools.com.au. Now, if you want to know more, why not visit our website, which is what I just gave you, essbiztools.com.au, where you can familiarise yourself with the tools that we have developed. And if you have any questions, by all means, please contact me and I'll give you a phone number in a moment. So the special offer, you can pay upfront cash payment if you wish, which will save you money over the monthly payment. So for the starter package is the special price until the 18th of October, $1,529. And for the advanced package is $2,519, was $6,500. That's where it will be going back to. If you want more information, and I hope you do, please send me an email, peter@essbiztools.com.au, or telephone 1800 232 088, and we could arrange a 45-minute complimentary Zoom meeting, if you like, to discuss how I think you could go about implementing the sort of packages which we have developed at ESS BIZTOOLS to help you deliver an outstanding range of services for your clients. I can't see that anyone's asked any questions. I hope that means that I've answered all your questions. If you can think of some questions you'd like answered later on, please let us know. We will be sending to all of our database a link to this webinar recording. So if after you've watched that, thought about it with your colleagues, you want to have a discussion, I would love to hear from you. Thank you for being with us as we look forward to being the business enhancement package provider for your firm. And we will also be sending CPD participation certificates to those of you who have watched this live presentation. Unfortunately, we can't do that. If you're watching the video recording at a subsequent time, you'll just have to submit it in your own declaration. Stay safe. Have a great day. Goodbye. And I look forward to hearing from you. Goodbye.